We have Sunil Reddy, Managing Director at Dodla Dairy, to discuss what's in store from here on. Mr. Reddy, welcome to the show, and always a pleasure to speak to you as well on NDTV Profit. DAM Capital has come out with an interesting note where they've initiated coverage and they have a target price of 1,600 on a Dodla Dairy. I'm sure you'll not be commenting on the pricing, but what is that structural strength that you're seeing from here on? Because the second quarter was pretty mixed. It was a high base that impacted your quarter, though the core growth seems to be pretty strong. What are the key things that you're watching out for in terms of what you're expecting in FY26 and 27?
First of all, good afternoon and thank you for having me on the show. A pleasure as usual. So our structure in terms of the changes that we have made is we have recently done an acquisition in Bihar and Jharkhand, which is basically giving us access to the markets of the eastern part of the country. So broadly looking at it, which we were always classified as being a regional player, that is now being moved into saying that the potential of becoming a national player will continue to be on the growth path that we're looking at. And also what we have started as a plant in Maharashtra, that we are building out a plant there with a large capacity of 1 million liters per day. Once that comes into production, the volume that we are seeing as growth itself from where we are to what can happen in 2 years' time is a significant growth in terms of what we can add on to what we are doing with our new capabilities that we are building it. Added to that, our Africa is doing well. The Kenyan acquisition that we have done is also doing well, and our cattle feed is also doing well. So with all the three lines doing, even if, for example, like how we saw the current year where the first quarter, because of weather, the margins were a little muted and volumes were there, which is normal with the dairy industry, which will get compensated maybe by the time we get into the next year summers are better, it will improve. So these little fluctuations will be there, but when you look at us in the longer, like a 2-year CAGR or a 3-year CAGR, we normally overcome all these and the growth will continue with the points that we had mentioned earlier.
As you mentioned about the acquisition, which is Osam, the operating margins are much lower for Osam as compared to what a Dodla deals with, right? So what is the target timeline that you're looking at to get Osam at Dodla's targets in terms of margins? And secondly, your synergies that you're prioritizing for realizations to improve over the next few quarters.
The synergies with Osam are very simple from where it is to where we are. I think even a few structural changes that we adapt to what is we do as Dodla in terms of our procurement and sales and rationalizing products will give us what from Osam's numbers to make it double of what we are getting from an Osam number of profitability. From there onwards, a year later, I think more in terms of optimization of freight, transport and other such structural improvements itself will get us maybe not on par with Dodla within the year, but maybe a percentage or two less than Dodla. But from a return on capital, it will start to be good for us.
Understood. Mr. Reddy, you spoke about the Maharashtra Greenfield facility, and good afternoon to you. This is Alex. I want to understand about the timelines there and what the implications are for revenue. When does that kick in?
So Alex, the timelines we're looking at it will be mostly, we are looking at it anywhere between 27 September to 27 December, depending on 1-2 months of here or there, the delays can happen. But this is basically a 1 million liter per day facility that we are building out. And even if it is in low value products of commodity that we look at, it should be a 2,000 crore kind of a revenue generator over a period of 3 to 4 years.
Mr. Reddy, hi, Sharad here. The milk procurement prices in southern regions, some places there has been a hike which we have seen in August and even some portions in October as well. But we are going into a season, the wedding season, and of course the winter season where we are seeing a strong demand. Historically it comes in. So what are your important trends coming when it comes to the procurement prices and the demand volume growth?
Procurement prices are not going to come down now because I think there is still a deficit of fat in the country by the time that is fulfilled. Although weather patterns wise, it has either been extreme rains or extreme cold. So I think procurement prices will stay where they are now. And we won't look at any increases because the demand also that we look at is compensated by the winter fall in other value-added products like curd and buttermilk, which don't come. By taking these two into consideration, I think we'll have to wait and see till Feb when we'll see trends changing. But otherwise, procurement will not come down. Procurement price will remain firm.
Okay, but so Mr. Reddy, just correct me if I'm wrong. Is it 30% currently of revenue right now, value-added products? And I'm just trying to understand the mix. Does that change going forward? Is it also seasonal in nature? Do you see that shift taking place in certain quarters?
Yes, basically seasonal products are dahi, lassi, buttermilk, and ice cream, which no dahi remains throughout the year, but in summers we get a substantial offtake which increases. And we had two basic differences from the previous year to this year. We also had butter, which was our commodity, which was there as a larger number, which this year we don't have to sell because there is a shortage of fat. That is the reason you might see a slight drop, but other products are all been growing, and that we think will be at 32% as we go forward.
I mean, so on a blended basis for a full year, if you're talking about FY26 and you're saying FY27 with new capacities, etc., coming online, new markets, etc., on a going basis, where do you see that blend for value added versus milk?
Between 32 to 35% will be value added, sir.
Understood.
Okay. One quick question, Mr. Reddy, when it comes to international operations, because there is margin pressure you had mentioned earlier as well when it comes to the Africa business. How are you looking at right now, and where do you see the international business going from here on?
Margins have again come back to normal, and therefore I have a big smile on my face that the procurement prices in Africa have come down and we have maintained our back to our original margin levels that is there. But looking at the Africa business that comes, which forms now roughly 10% of our revenues, I think it will remain in the same tandem because we think that our growth in domestic markets also continue. And Africa, we're very cautious in terms of going in for new growth. Unless we're very sure of it, we don't go in because we have to weigh country risk, currency risk, and other factors, not only the business availability on the ground. Therefore, we try to keep it a little more on the safer side and keep the growth at a controllable level. We're not going to be very aggressive about Africa.
Mr. Reddy, I'm just looking at FY25 revenue at about 3,720 crore rupees. It's a 19% growth, and you've actually had pretty strong double-digit growth for the last 4 financial years, right? I'm just wondering, with the new capacity coming on board, with the new areas that you're adding, new markets that you're adding, what the projection would be. You've spoken about the implications of a greenfield project. So anywhere between next year or maybe the next couple of years, where do you see yourself hitting?
See, we are very clear that we target CAGR growth of 15% in terms of revenue and at least 10-12% in terms of volume is what we look at. So 15% growth rates, I don't foresee a problem in the short term of 2 to 3 years' time as we go forward.
Okay. So, you know, I think lots to watch out for as well. Thank you, Mr. Reddy, so much for joining us on the show. It's always a pleasure to speak to you as well.